I'd like to call this meeting to order. Oh, hold on, you tell me when.
Bringing Jill on, they're a good yin and yang for each other. Right. So we saw that during the interviews. Yeah. Because I walked out saying, okay, the smartest thing we can do is one way or another. And so. Yeah, that still gives us a whole. Right. Yeah, have you had any lingering effects from COVID?
I got a little bit stronger in my mouth.
I'll try to behave.
Where the scar is at, he said we're okay. That's not gonna affect your life. Oh, thank you. Yeah, so yeah, no, it's been good. 100% feel good. I wish you didn't have to wear this when you got antibiotics, but you just yeah, it's good.
I was kind of surprised that the governor didn't include first responders. Just said law enforcement.
Are you ready?
Yeah, and I think.
We ready? Okay. I'd like to call this meeting to order. Now that we have a quorum, I'd like to have a moment of silence for our past financial chair. Thank you. Secondly, I would like to wish a very happy birthday to our CEO, Beth Houghton. Yeah, I know that feeling. Okay, action item A, approval of the Finance Committee Chair. Colleen?
Okay, so we need to appoint a chair of this committee. And so that would be up to you guys. I know Mr. McCurrick has been running our meetings for us since we've gone to the virtual format for about the past year. But we now need to have a formal replacement of the Finance Committee chair. So I will leave that to you guys to fight amongst yourselves, and then we'll take a vote, and you will have a new chair.
I would move to appoint Mr. McCurrick as Finance Committee Chair.
I will second that.
All right, Mr. McCurrick, there is a motion and a second for your appointment as the Finance Committee Chair. Do you want to say anything? Is there any discussion?
More than happy to continue at this as the chair. I know I could never fill Bernie's shoes, but I'm more than happy to continue this through this year.
Wonderful. Do I have a vote? All in favor, please say aye.
Aye.
Any opposed? All right, Mr. McCurrick, you are now officially the Finance Committee Chair, and I will turn this back over to you to run.
Thank you. All right, action item B, approve the FY 2020 financial statements and audit report. Laura?
Thank you. So with us today, we have representatives from Cherry Beckert who have completed the annual audit for fiscal 20. Our bylaws stipulate that the Finance Committee will assist the Board of Directors in fulfilling those responsibilities. So with us, we have Victoria Bean, who is the Audit Manager, as well as John Gilberto, who is a partner in the Assurance Services, and we're very fortunate to have him because not only is he a partner in the Tampa office, he is the government industry practice leader for the firm, and he happens to reside in Tampa. So I will turn it over to them. They have a presentation to give us today.
Thank you, Laura. Can you hear me all fine? Yeah. Awesome. So again, my name is John Gilberto. I'm a partner in our Tampa office. I'm over the governmental services for the firm, as Laura said, and I'd like to thank you for letting us be here today to present the audit results where we are right now. Behind me is Victoria Bean. Victoria is the manager. She was the one that oversaw the day-to-day operations, all the processes, and making sure the audit got reviewed all the way through the staff and the senior levels before it got to me. So with that, we'll go right into our presentation. The presentation, next slide, please. The presentation that we have today goes over the timing, the nature, and the extent of what happened during the audit process. So we're going to go over the requirements of what we had to do during the audit process, because as I've said to you in the past, and I know there's some new members, This CAFR, and you have a CAFR now, Comprehensive Annual Financial Report, is not mine. It's not management. It is actually the board's. This is yours as the governing body, those charged with governance. So we want to make sure that you are comfortable with your financial statements and our audit of your financial statements. So we have completed our audit, and we understand that we'll be issuing our opinion after the March board meeting when the audit is approved. But today, we're going to go through, again, the timing, the nature, extent of what happened during the audit process and some of the audit results that we had during the process. Next slide, please. So, as I said, this year is the second year you have a CAFR, a Comprehensive Annual Financial Report. This is different than just an annual audited financial statement. The CAFR includes very specific information that is required in all the different aspects to be able to qualify as a CAFR. And those are 3 sections fold. The introductory section, the financial section, and the statistical section. Easy for me to say. There's also a compliance section. The introductory section has the transmittal letter from management that goes over the entity as a whole and what's going on. It has your lovely pictures and information in there as a board and management. And it also has this year, for the first time, a Certificate of Excellence in Financial Reporting from the Government Finance Officers Association. This is a certificate that says your financial statements are at the highest level of compliance with all the different requirements that are out there through the checklist of fair disclosures of all the accounting pronouncements, and it's reviewed by your peers. So it goes to the GFOA, the Government Finance Officers Association. They send it out to a group of peers who review it, give comments back. If it meets all the requirements, you get your certificate. You applied for the first time last year, and you received your certificate. Not an easy thing to do on a first-time application. So congratulations to your management and your staff to get the information together to be able to issue a financial statement that meets the certificate. So congratulations, guys. Next slide, please. So your financial statements just don't include Juvenile Welfare Board, the JWB. It also includes the Pinellas Corps Management Services, which is a nonprofit separate legal entity. However, for all intents and purposes, it is run and operated for the benefit of JWB. And it shows as a special revenue fund within your financial statements. This is no different than it has been in the past. This is the same as last year and the year before and the year before, but it is a separate legal entity, but for accounting purposes, it is part of the primary government of JWB, and it is included in your financial statements. Next slide, please. So our responsibilities as we're going through your audit is, well, first, you follow GAAP. That's the generally accepted accounting principles. That's the GASB. That's what you heard, that GASB, that mean old GASB that made you do the pension and the OPEB that Bernie always hated. That is the Government Auditing Standards Board. They're the one that sets the accounting standards that you have to follow. It says how you measure your liabilities and how you record and when you record expenses and revenues, assets, and net position. It also made up that funny wording for the deferred inflows of resources and deferred outflow of resources, which really nobody really understands what that's for, but it's an offset to a contra asset and a liability. And those are all in your financial statements. So that's what you have to follow. Our requirement is to audit that you're following that. And we do that in several ways. The first one is under the generally accepted auditing standards, the first GAS with AA. And we also have to follow the government auditing standards, which is the one GAS with 1A. Those standards make us look at your accounting, your GAAP, to make sure they're fairly presented. It also makes us look at internal controls over financial reporting and compliance with laws, regulations, contracts, and grant agreements. So we look at several different things as we follow our standards to make sure you're following the GAAP. Then the state of Florida also has section 218, 415 of the Florida statutes. It's an additional requirement where we examine your compliance with the investment policy to make sure that you're staying in compliance with what's required by the state. So those are the different things that we have to look at as we're doing your audit, we're required to look at. So the good news is there was no changes in the planned scope of our audit from when we started our audit all the way through the process. And this year was a very unique year under the COVID environment. The whole audit was done virtually. But your team was able to make sure that we did not change any of our audit procedures. We looked at everything that we would have looked at if we were on site, every document, every supporting information, every analytic. Everything was done the same way as if we were on site. So again, we give a lot of credit to your management to be able to upload all that, to to make sure that we got the information to be here today to go over the final results. Next slide, please. So here's our anticipated opinions. We say anticipated, even though we've finished the audit, because the board hasn't accepted and the audit date won't be approved until the acceptance by the board next month, we anticipate these. So if something happens between now and then, this could change. So if we find if something comes in the paper and there's a material fraud, if you decide to issue some debt, we'd have to go in and make some changes into the audit. But other than that, we're not anticipating any changes. So our audit is anticipated to be unmodified. This is the highest level of assurance you can receive from us, your external auditor. It says your financial statements are fairly presented in accordance with the GAAP, so on a consistent basis, which is a good thing. It's the only thing you'd ever want to hear from me. The next one, under the GAS letter, that's the Government Auditing Standards letter, there's 2 sections to that. There's no opinion in it, and it's a no comment letter, which again, a no comment letter is a good thing, because if there was comments, it would mean that I would be telling you had a material weakness or significant deficiency in internal controls, which is a bad thing, which you didn't have, or you would have some material non-compliance with the laws, regulations, state statutes, which we did not note during our audit. Again, good thing. Next is the management letter. The Florida General makes us do a management letter on financial awareness and other issues. There was nothing noted in that letter. Again, it's a no comment letter. It's in the compliance section of your financial statements. And the last one is that section 415 of the Florida statutes. This is the report on compliance with local government investment policies. This will also be an unmodified opinion. We had nothing that said that you weren't following these, so we were able to issue an unmodified opinion here. Next slide, please. So here's what we do, and here's part of the area that we follow. So we really start with the internal controls. Even though we don't opine on internal controls, we look at them to make sure that our audit process is sufficient, and it helps us work around where we're going to audit, how we're going to audit, and what we're going to audit. So there were several significant areas that we really focused on this year. The first one was the expenditures, of course, payroll, financial close, and budget. We had no material weaknesses that we noted during this process. Everything seemed to work very well. Where we tested the controls, the supports, the approvals, they were all done when we did our tested controls. The tested controls we did do this year were over the cash disbursements and the budget. We did the payroll last year, and under the auditing standards, as long as that there were no changes in that system, when we walk through and test the system, we don't have to do another walkthrough, and we can rely on last year's. And as I said, as we walked through, we didn't note anything different. The control was still working, so we were able to rely on last year's payroll tested controls. As it relates to testing the journal entries, we really focus on the manual journal entries, and we have a data analytic tool that downloads all of your data and looks for certain things that we put in the criteria for. Common journal entries that are manual, weekend entries, entries at 2 in the morning. There's different criteria that we put in to look for an unusual or a significant transaction that is a manual entry and not part of the normal system processing. We didn't notice anything that changed our opinion, and all the entries that we did note were properly approved and supported. We also take a look and we step back and look at your IT system because, again, data in is data out, or trash in is trash out. So we want to make sure that there's controls over the entry of the data that's going into the system and that's coming out of the system. So we looked at that area and didn't notice anything that we needed to recommend to you for a material change. Next slide, please. Okay. So here are some of the significant audit areas that we focused on after we looked at the controls, found out the processes, found out how they worked. Here's the areas that we really focused on this year. We looked at cash and investments and making sure that the measure of fair value in the investments was supported and proper. We really focused on the revenues and the receivables. The good thing here is even in the COVID environment, you're one of the few governmental entities, the revenues actually went up. Your property tax base in the county was significantly higher. So your property taxes went up, even though there are certain accounts, such as your contributions and your investment earnings, that did go down, mostly related to the COVID environment. But your property tax revenue went up, so your revenue as a whole went up, which was very rare in governments across the country this year. And of course, the capital assets and changes in capital assets on the asset side. On the liability side, we focused on the payables, the cutoff of the payables, to make sure they're properly recorded at the end of the year. Also with the different accrueds, the payroll, and then, of course, the pension liability, which is always the last thing that comes in because it's done at the state level and then brought down to you. And then the other areas that we focused on were the net position, the allocation, and the different classifications of net position. If there's any subsequent events, which we'll continue to do through the Finance Board date, we looked at any commitments, estimates, and then, of course, we have a legal letter that lets us know if there's anything out there that we may have to record a commitment for a loss contingency, but there was nothing noted in the letter, so there was no disclosures required due to that. Next slide, please. Okay, so as I said, the gap is what you follow. Your gap is in footnote 2 of the financial statements. This is your significant accounting policies. This is where you follow the gap and you disclose to the reader, the user of the financial statements, and to you, what the different kinds of gap you're using, how you measure, how you record, when you record an asset, a liability, an expense, or a revenue. There were no changes this year. The GASB, the people that set the accounting standards, postponed all of the GASBs that were supposed to come out and be effective for another year because of the environment and people trying to struggle with how to make sure that they had the right people in the right place and the changing of resources in most of the governments to not be affected by new accounting standards. So next year, there's a new one on the fiduciary activities, and year after that, the leases one comes in, and that's the big one where you need to look at all of your operating leases, and there will be no such thing as really as an operating lease going forward. You'll see a right for use asset and a liability for the lease obligation that will offset for the most part on the financial statements in 2 years down the road. So that was also pushed off. So nothing new this year. So if you look at your footnotes, it's pretty much apples to apples from the disclosures and all the classifications that it was in the prior year. So significant accounting policies. Nothing unusual was noted. And as I said before, the COVID environment was the big change for most people and most engagements, not only in the way we audited, but also in the effect on what we could do for analytics or what we expected for a downturn in certain revenues, expenses, change in the classification expenses, and the new expenses coming in to help support the social distancing and the other areas that you needed to do. So with that, I'm going to turn it, and I'll stop for a second. I went through pretty quick. Before I turn it over to Victoria to kind of go through the rest of our audit steps, is there any questions you guys have for me yet? Okay, I'm going to turn it over to Victoria to continue on. Thank you. Next slide, please.
Good morning, everyone. Can everyone hear me? Awesome. So the financial statements in front of you do not just contain hard numbers. Some of those numbers inherently require estimates. And through our audit procedures, we identified several significant estimates that management was required to make. Some of these estimates include the estimate for the allowance for doubtful accounts, which management based on historic collection rates. Another one of the estimates was the useful life of capital assets, which is based on historic knowledge of similar type assets. And another estimate that was significant that we noted was management's estimate of the OPEB and pension liability and expense, which is based on actuarial calculations. Through our audit procedures, we evaluated key assumptions and factors within this and reviewed it for reasonableness to the financial statements as a whole. Next slide, please. Thank you. Professional standards require us to communicate any audit adjustments or past audit adjustments. What these are is once management has provided their trial balance through our audit procedures, if we identify anything that means that we need to correct these financial statements for presentation in accordance with GAAP, we'll consider that an audit adjustment. In the current year, there were no corrected misstatements. There was one uncorrected misstatement, which was a result of a prior year misstatement. But after reviewing the information provided to us by management elected to pass on this adjustment as net fund balance was properly stated for this year. We are pleased to report there were no issues or difficulties working with management, and we did want to take a second just to thank Lynn, Laura, and Richard for being so responsive and accommodating in this COVID time, constantly hopping on video calls and screen shares with us, and really just making sure we had everything we needed for the audit. Next one. To our knowledge, we are not aware that management has consulted with any other accountants. Throughout our process of acceptance and continuance, we discuss a variety of issues that could arise as continuing to be your auditors, and we would be required to report any of those issues to you. We are not aware of any such issues. We will receive from management a written representation indicating that all of the information and support provided was true to the best of their beliefs. We will also, as John mentioned, as your auditors, issue a management letter as required by the Auditor General, and this will be included in the financial package. Next slide. We do not provide any audit assurance over the supplementary information, but we do read it and review to ensure that it is properly supported by the financial statements. Accordingly, we do not express an audit opinion over the required supplementary information, introductory section, or statistical sections. Next slide. Thank you. As we discussed with the estimates and management's application of accounting principles, we do believe that they are appropriately conservative in these applications. Throughout various stages of our audit, we do speak with members of the board, members of management, and others throughout the organization regarding fraud and illegal acts. And if we were made aware of anything, we would be required to communicate that to you. We are not aware of anything. And last but certainly not least, we are independent from Juvenile Welfare Board in both fact and appearance, and we are not aware of anything that would impair that. And I believe we will open the floor for questions.
From the board? If none, do I have a motion to approve the audit report?
So moved.
Second.
Have a motion and a second. All in favor say aye.
Aye.
Those opposed, same sign. Okay. Well, thank you for your, don't leave yet though. Thank you for your report. We appreciate the information provided, and also congratulations to our staff and to the team for the job well done and the certifications that you received. Now I'd like to ask management if they would be so kind as to leave the room and allow the board to meet with the auditors and have a specific sets of conversations or any questions that you may have. That's true. Well, they were going to. If you would, please. As is customary during this time, it's felt very strongly that the Audit Committee, the auditors would have an opportunity to talk to the Financial Committee about any issues or thoughts or any questions that we may have. And so I'd like to kind of open the stage a little bit, because it is a unique year. Mm-hmm. And because of the nature of what we've gone through and will continue to go through for a period of time due to COVID, do you see any specific or do you have any specific concerns, or are there any issues that you might want to bring up to this board that we need to be aware of and or need to be looking forward to or for?
From an accounting point of view, not really. It's the use of the funding that you have and the growth of the investments that always concerns us. Because you guys did so well last year, your expenses really didn't go up and your revenues went up because of more taxes coming in, you built a bigger base. But that, from an accounting point of view, that doesn't really affect us. We're going to audit that additional revenue. We're going to audit that additional investments. We're going to make sure it's from the right classification of net position. And we're also going to make sure that it is spent appropriately what's required for your mission and your course of business. Under the COVID environment, that is changing. How you spend it, where you spend it, and making sure you spend it properly is always going to be a concern for us. So that's really where we look for down the road, is changing in programs, the review of those programs to make sure that there's support for the expenses that are being used for the benefit and the mission of JWB. But that's really where we see the change that would affect us from an auditing point of view.
Do you see any changes coming specifically around accounting rules? Are there any changes to any of the rules that are going to happen quickly and that we should be aware of?
Not quickly, no. It's a great question because they're always changing. And unfortunately, the good thing about the GASB, the accounting rules, is they pushed everything off, but there's nothing that's going to be a material effect to you. The one for fiduciary accounts is going to affect counties, cities, and school boards very heavily compared to authorities, commissions, and other people. So I don't think that one will affect you too much. Leases are going to affect everybody. It's 2 years down the road, but you really don't have that much in operating leases. And I know that your team has already started working on that because they've asked us to review a spreadsheet and give them some guidance on how to do that. So they started that a while ago, so they're already ahead of the curve compared to most people. And the value or the quantity of your leases is not as big as, let's say, the airports. That's all they do on both sides. So they're going to take thousands of man hours to accumulate their data, and that's going to take a lot of man hours. But for here, I don't see the effect. There's a big one coming down the road, but again, not anytime soon, for the reporting model. Is this CAFR in the format it has for the different kind of financial statements the best and right thing for the environment and for the people out there that are using your users of financials? That's going to be a big debate. It's at the Accounting Standards Board right now. It's their main project they're looking at. And that, again, will be several years down the road. But again, you may see a large change in your financial reporting package, but not anytime soon.
Any other board member have any other questions?
I know this topic is a little bit later on the agenda, but on the 5-year planning forecast, coming back to what was just mentioned, I've discussed with Laura, and I intend when we get to the topic to make sure, because we've had that good year with more revenue, and we have a line item for future programming, contingency, our 2-month cash flow reserve, and an unassigned cash balance, that we're holding on to quite a bit of money. And that's a topic I want to discuss, and I want this board to discuss. As you mentioned a little bit about that, we have a new strategic plan, and I want to make sure that we're spending appropriately to accomplish the goals in this strategic plan. And there's a huge amount of unmet needs. So I just wanted you to know, when I received the packet, even before today's presentation, it's a topic that's top of mind for me. And I just put it out there.
Okay, thank you. Any other questions? Yes, Commissioner?
I'm not sure it's one that you can answer, but do you find that our staff is effective and efficient and responsive?
Yes, I got to tell you, we love working with your staff. They're very responsive, extremely responsive. And the addition of Laura last year with her knowledge base and the oversight of the staff, even with the remote environment and having gone back and forth, the audit took no longer this year. Again, we changed no procedures. We looked at 100% of the documents we would have looked at the prior year, the year before, or if we were on site. Everything was done. Richard and Lynn are extremely responsive, and they got us everything we needed. Because, you know, as your auditor, we ask a lot of questions, and we just don't take a yes or no answer. We've got to see the support. So, like, in God we trust, everybody else we audit. And so they need to support what they tell us, and they did that. So they were very responsive. We're here. We were done the same amount of time we were done in last year. So everything went very smoothly, where there are circumstances out there that we see that things are running months later, lots of months later. You guys were right on time because your staff did a really good job.
Are there any places where we're not transparent enough, where we could be more transparent than what we are? In light of some legislation coming forward, again, there's another question to the special districts not being transparent enough. Is there some place we're not transparent enough that we should be better at?
Well, from an accounting point of view, you guys are 100% transparent, and it went even further this year because you added information that you wouldn't have had in your financial, well, you added last year information that you never had before to become more transparent by adding the introductory section, the statistical section. That gives 10 years worth of data of what you've been doing from your revenues, your expenses, head count, operations, all kinds of things that wasn't there before. So your financial, from an accounting point of view, your financial statements with the CAFR, because of the requirements of putting these things into your CAFR, is a lot more transparent than it would have been 2 years ago. So you went in the right direction from an accounting point of view. And that's, unfortunately, that's kind of what I focus on, and that's what I can address. But yeah, I think that, and it meets the requirements, and the good thing is you got your certificate that showed that it did meet all the checklist of fair disclosure that required to get the certificate.
Any other questions or comments? Great. Well, thank you again. As you know, we are in the process of of what we're required to do in identifying the auditor for next year and future. We look forward to receiving your proposal.
Look no further, the best is right here.
Okay. Well, that's good to know. Again, thank you so much, and let's bring the management back in. I would like to take a quick bio break if I can.
Yeah. Again, thank you guys for the opportunity. We've appreciated working and being your auditor the last several years. Thank you again.
Thank you very much. Yeah.
That's possible.
It's always something.
Does the fact that Mike left mean anything? Other than drinking a lot of coffee.
After this executive session, I'm out of here.
Was it that bad? Mike had to leave? Oh,
Okay. Let's move on to item C, which is the approve participants for the management software request for proposal. Diana, I'm sorry.
Good morning, Diana Caro, Budget and Business Services Manager at JWB. Just before jumping into the recommended action for this item, I want to provide some background. For the last 7 years, JWB has used Mosaic's GEM system as its core financial and evaluation performance tracking solution. In essence, this is how all our funded agencies are paid and how many, but not all of them, report participant data to JWB for evaluation purposes. The GEM system was highly customized to meet both of those needs for JWB and has required enhancements to be made to the system every year. As the needs and demands on the system became progressively more complex over time, JWB decided last year to look at replacing it. We worked with our IT consultant, Gartner, and completed a lot of market research and determined that our best path was to purchase 2 separate best-of-breed commercial off-the-shelf or COTS solutions, one for the financial side and one for the participant side, so that we don't have to continually enhance or customize the system. The users for both of these systems are different, so it doesn't create extra work for them or JWB staff, and there's no integration required. JWB receives nightly uploads to our data warehouse, so any data integration that needs to occur happens there and isn't necessary between the systems. The board already procured the grants management system for the financial side in October and will be going live early next month. The purpose of this agenda item is to seek approval to award and negotiate an agreement with Social Solutions Global, Inc. for the participant management software. Social Solutions was selected as the highest ranked firm and was unanimously recommended for award by the Evaluation Committee. The agreement would be for an initial term of 5 years in the amount of $655,575 with an option of additional successive 1-year terms. The price for the first year of the agreement would be $186,535, which includes $117,260 for the annual subscription fee and $69,575 for one-time implementation services. This amount is below the $250,000 that the board allocated this fiscal year for this software and service, and the annual price thereafter is fixed at $117,260 a year. Ultimately, with the purchase of both of the new grants management and participant management systems, we should realize a savings of $16,000 a year, while also getting the benefit of additional functionality on the grants management side that we don't currently have. At this point, I'll open it up to questions or comments. Laura Peel, our IT director, and I are both here to answer any questions you might have. While she was not on the evaluation committee, she did read all of the proposals and attended all of the demonstrations. Also, Judith Warren served as our executive sponsor for this procurement, and she also attended all of the demonstrations and evaluations meetings and is also available if you have any questions.
Oh, there we go. Now I am. Okay. I would like to start the questions, because hopefully there'll be a number of them. But one of the questions, I looked at the ratings between all the from the different vendors, and by all those who rated. What was significantly, I'm going to call it glaring, but was significantly visible to me, was that there was a varying difference in some of the views, but also there was a varying difference of pricing as well for the software. So I'd like to get a little more explanation about both of those, the varying views, and then what a significant difference between the pricing amongst the vendors.
I'll speak to the pricing first. Like I said before, we did work with Gartner, our IT consultant, before we went out, and that's how we came up with the budgeted amount of $250,000, which is what they thought was a reasonable price for this type of procurement. And as you can see, well, out of the two of those came just under that. The other solution, which was much, much more expensive, their model really wasn't to work with funders. They worked with individual not-for-profits. The way that their pricing is set up is by sites. So I think if they had contracted with us, this would be a new model for them. We had hoped maybe in the best and final offer phase that they might have adjusted their model to work better for funders. They did not. And so it was a much, much, much more expensive product based off of that pricing model.
Okay. What about because in fact, as I looked at the ratings, IT appeared to give this particular vendor a much, much higher rating than the other. So can someone explain that to me, why?
Yes. So Laura Peel, Director of IT. And as Diana mentioned, I did read all the proposals, and I sat in all the demonstrations and was a part of the evaluation team meeting. Given this, Pete is one of my employees, and he's the one that's kind of the outlier on social solutions. He is newer to JWB, and this was in fact his first RFP, in which I shadowed him on. Some of the discrepancies, or not even discrepancies, or I think the thoughts behind his scoring was based on the original demonstration, in which some of the pricing was different in the proposal than what they had put in the demonstration. Some of the attendance perhaps was an issue because they had showed us some functionality that was coming, but not quite there when we saw the demonstration. And then also the SAP reporting. We talked through all this when we got to the evaluation committee meeting, and discussed the pros and cons of each. And in fact, in the end, Pete voted, the team voted unanimously for social solutions. Some scores were adjusted, but of course, that's up to the team member. But in the end, he did vote for social solutions. And I can tell you from the technical perspective, I have no concerns over this company. They use Amazon Web Services. They are a strong company that's been around a long time and does this for many, many years. As far as, some of the other things, I think the attendance will work out. I think what they proposed is a very good solution. We did work through some of the pricing that was originally a concern and is not any longer. So we're going to move into the negotiation phase of the contract, assuming you approve this, and some of those other small issues will be worked out. But
Okay, and so just staying with that, because from an IT perspective and just looking at the again, the variance of how they proposed and the like, that specific company had a tremendous amount of hands-on consulting that they were adding into this proposal. And I guess my question is would be really for the team, and that is, do you see this software as being specifically just not just replace, but a replacement of the current software to be used as we have in the past? Or is it a replacement of software to help enhance the processes and maybe change the processes that we've operated in the past?
So, well, I'm assuming you're talking about N-Focus with the extra hours. Really, that's much beyond what we were looking for. They're really looking to be the system for the providers, and that's not what we were looking for. The providers traditionally have their own systems and should. In fact, if we were to stop funding them or, whatever the case may be, we don't want them dependent on us for the future.
If I can stop
sorry,
there,
go ahead.
that's not what I think that it was, and maybe I can be totally wrong. It's old consultants die hard. Typically in types of software, especially in this kind of replacement, companies, not companies like us, because we're very different, but companies would use this as a way to change the processes which they operate under, or the procedures in which they operate under. There's some software companies that would be out there that would force you to do that if you bought their software.
Right.
And it would be to comply the way their software works. This one could be that way. Others would then look at potentially, you would identify all the changes in the processes that you want to change, and then you would find the software that best met most of those needs and that could be integrated with some of the other things that you have. So assuming that the approach that you're doing is really one of, and tell me if I'm wrong, the approach you're using is you're very comfortable with the processes and procedures that are in play today. You're not expecting to make any major changes to those. So what you're really looking for is a software to just replace what we already have and would be easiest to install and integrate into today's environment. Is that true?
Yeah, I would say, one of the issues with Mosaic, our current system, is that it wasn't a custom, off-the-shelf solution. We were making changes and not necessarily that benefited us in the long run. What we were looking for is a COTS system with this. We were looking for someone who's been in this business, who can lead us in best practices. I can't say that none of our processes will change. I think with any system they may, but we expect to the better. Being that Social Solutions has been in this a long time, they're familiar with this. They have a system that meets most of our needs. So we expect to benefit off of that. When we looked at WebAuthor, to be honest with you, they're more like our current system, and that was something that a lot of the team didn't necessarily like, because we're looking for something that's different, that would improve our processes and our ability to report back to you. And we really feel like we have that with Social Solutions.
And Mike, I would add strategically our reason for making this choice to go after, to do the procurement in the first place, which was made roughly a year ago, had very little to do with the desire to change our processes, had everything to do with assuring a stable platform. And we were not comfortable that the vendor that we're using now would, into the future, be a stable platform.
Okay. You answered my questions. Anyone else?
I just had one quick question. I noticed in the scoring, there was additional points for incorporating JWB's minimum terms and conditions, and Social Solutions got 0. What is that, minimum terms and conditions?
We tried something new for the first time with this procurement in that oftentimes, especially on IT procurements, after you get to the award, you spend a lot of time then negotiating the final contract. So this time, we asked them to give us their contract templates. We had our required terms and conditions, but we offered anywhere from, 0 to 5 points if they not only just gave us their contract template and said, oh, we agree, we will adhere to all your minimum terms and conditions, but if they took the time to take our terms and conditions and integrated them into their agreement, because that takes time to work that out with their legal, and that was in hopes that we could accelerate the negotiation time after award. So we did have some that took our minimum terms and conditions and incorporated it into their agreement before proposing, and those received 2 points. And if you did that and also took no exception to any of our special terms and conditions, you could get up to 5 extra points. So Social Solutions gave us their contract template. They said they would agree to our terms and conditions. They did not integrate them, so that's why they received 0 points.
I see. So it was just a time-saving thing up front. It doesn't have anything to do with them not meeting our minimum
They said
terms
they'll
and
agree,
conditions.
they just haven't incorporated
I
them yet.
understand. Thank you.
So Brian, as a lawyer, let me just give you an example. The IT contracts are notorious. They send over these agreements that say we're going to indemnify them for everything. We're going to keep any communications between us confidential, which obviously we can't do that with public records, and under sovereign immunity, we can't agree to that. So we were trying, and lots of times that takes staff like hours trying to educate some of these people. So we were trying to nip it in the bud. I think it worked for the most part.
Okay. Just one last comment. Again, thanks for answering my questions. I didn't want to make them seem like I was being negative in any way. I just wanted to make sure I heard what you were really thinking about, and I'm very comfortable with that. I'll make one more comment, again, from long years of working with software vendors. They tend to, some of them, most of them, tend to as they process and go through, there's a lots of new potential, and they should be making adjustments and corrections and enhancements to their software, and they're always going to want you to pay for those. And so you just caution you to make sure you watch your user licenses and the pricing structures with those and how they are, and then future enhancements that they may or may not be coming down with. Typically, what they really like to do is at the end of that, they batch them, and then they want you to sign a new contract with them, and they reduce their price. But by reducing their price, they've only increased the cost in somewhere else. So just keep an eye on it, Diana. I think you know that game well. So, just caution you and ask you to just keep an eye on how they play the pricing game, so that we don't wind up paying a lot more than what we expected to in the future. With that said, do I have a motion to approve?
So move.
A second?
Second.
I have a motion to approve and a second. All in favor, say aye. Any opposed, same sign. We have an approval. Thank you. Action item D, release of the audit services request for proposal RFP. Laura?
Thank you. So we're here today to seek approval for release of the RFP for audit services. It will go to the board after recommendation, and the plan and the intent is to physically or actually release it on March 12th. So there were some revisions that had been made at the last meeting that the Finance Committee met back in December of 2020, and there's been some minor changes, if you would, or to the evaluation factors, and I wanted kind of to point those out to you. So one of the things that was changed is when we were looking at the criteria for evaluating, we had used the word fees, and we decided to change that terminology to reasonableness of cost, because that way we felt like when you're evaluating on fees, you would also want to look at the hours that they had proposed relative to the proposal, as opposed to just straight up looking at the dollar amount. So that was modified, and that occurs in round 2. In round 3, which is when the 3 firms that are selected will be presenting, there was language added regarding financial resources. So we felt like a lot of the CPA firms, and me coming from that environment, that's not something you want to provide your audited financial statements or so forth when you're submitting a proposal. However, if you get shortlisted, and that's what the language states in the RFP, that if you make the shortlist, then you will provide us with some financial resources, summaries, whether it's your audited financial statement or a tax return or something, to give us information so that we can determine the financial stability of the organization. Certainly, if we have responses from the Big Four firms, you know, they've got, you know, audited statements. We don't know who's going to respond to this RFP. We could have some local firms that might be interested in us, regional firms. Cherry Bekaert is a regional firm, so we'll have to just kind of wait and see. So that was added in there. And then the other item on the evaluation criteria, we kind of combined a few things after the discussion we had in December when we talked about modifying the time limit. If you remember, we had 10 minutes for a presentation and 10 minutes for Q&A, and then we combined it and just said, you know, 20 minutes. So we decided on the evaluation side we would combine that as well. So when we evaluated the presentation and responses, we put that together, and then we added the estimated hours and fees in there. So we could have the conversation during the presentation. If for some reason we got a proposal, and for example, you know, their budget was 1,200 hours with a fee, and then somebody else had another one for 700 hours, would give us the opportunity to kind of have a discussion relative to that. The timeline is included in your memo. Like I indicated earlier, the intent would be to release this on March 12th and hopefully have a contract in place by August 1st, which would give the auditors time to start their planning for their interim work for the September 30 audit. Also attached in your memo here is we've put together an evaluation procedure memo, which provides an overview for you for the roles and responsibilities of the Audit Selection Committee. This is in lieu of having an additional meeting to go through all of these items, which we normally do with our evaluation committees. We didn't feel it was necessary that we needed to have an additional meeting to do that, but you certainly would like to read through that to see what the roles and responsibilities are of the committee, so that we can have a pretty smooth process when we get to that point. All the meetings should be on your calendars relative to the evaluations. The timeline indicates when you'll be getting the proposals. I will be putting together a financial summary for you to be able to analyze and look at the different proposals in a nice, succinct way, but you will still need to go through and evaluate those yourself through the different rounds. Any questions? Turn it back over to you, Chair, before the vote.
Do I have any questions from the board?
Move approval.
I have a motion to approve and a second. All in favor of moving forward with the request, say aye. All those opposed, same sign. Okay, we are approved. All right, discussion items. Financial report for December and January 21st. Laura?
Thank you. So I've provided both the December and the January financial statements. The December statements were approved at the January board meeting. However, we didn't have the opportunity to discuss that here at Finance Committee. So I'll be glad to answer any questions, but I'd really prefer to speak to the January statements since they are more current information, unless there's something in December that anyone may have a question on. So looking at the January financial statements, as you're very well aware, we have a very healthy balance sheet. We've got close to $88 million in cash and investments. Our pension liability, which of course is the unfunded net liability that we have to record on a GAAP basis. And then in the equity section, we delineate between the assigned cash flow requirement, which is our 2-month reserve, and then followed by the unassigned reserves as well. And that's an additional month that the board has determined would be policy, which is another 8% or so. And looking at the statement of activities or the revenues and expenses, just a few things to point out, and again, reminding you that January is a 4-month financial statement if you're looking at year-to-date numbers. So if we look at the year-to-date numbers for revenues, our property ad valorem revenues are $70.1 million, which is about 89% of our budget, annual budget. I also wanted to remind you that the monthly budgets are a little more accurate this year. We took the time to go back, and I think I've mentioned that before, and try to do a better job with the monthly budgets as opposed to taking 1/12 of the prior year. So in looking at that, just kind of keep that in mind, if you would. But on the revenue side, like I said, ad valorem, we've received 89.7% of our total budget. I also want to point out that interest earnings are substantially lower than what we had anticipated. Although we had reduced the budget significantly, we are still in a position where we've only collected $25,000 in earnings this year, compared to a year ago that was $190,000. So, and there's other items as well, but just pointing that out. The other thing to focus on would be your program expenses and where we are relative to that. So year-to-date, we're at about 12.9 million in year-to-date expenses for the program side. That compares to 12.2 million from the prior year. Keep in mind that the prior year, when you're looking at it as a percentage of budget, because our budget last year was lower than what it is now, it came out to 17.8% of the budget. In the current year, we're at 17.9%. So we're pretty much right in line with spending in comparison with our budget. And you can see the administrative expenses and the other items are pretty much in line with what we're expecting. That follows by the pie chart or the graphs relative to budget actual, our transfers that were made in contracts, and then the last page, we are required to report to you on the investments as well, and you can see where our cash and investments are being held, and you can see the allocation between those different entities with, between Regions Bank, BB&T, Florida Prime, and Fliggett. So any questions on the financial statements?
Do you have any questions, any comments from any of the board members? Hearing none? Do you want to? Well, okay. All right, do I have a motion to approve?
It's a discussion
Oh,
item.
just discussion item, that's true. Okay.
Yeah, just,
So just a comment,
Yes, please.
having not to do, I was actually looking at the contract for Dr. Depeche. Yeah, that was a heck of a good price. He was superb.
He
And
was.
It was a question, I was just curious, but it was, do I see $2,000? I thought he was
Tribute that
absolutely
to
excellent.
Linda.
Yes,
That's amazing.
It was he was excellent.
well, and actually he donates his proceeds to the Reach Out and Read Foundation of Wisconsin, so he doesn't keep the funds himself.
Was it a less price because virtual? I'm
Yes,
assuming we
yes.
didn't have his travel and transportation. Very good. Just a side comment.
Excellent. Okay. Let's move then on to the budget and forecasts
Yes,
for
so.
2021, 2025.
Thank you. So we have started the process of putting together a budget and forecast, and we're a little earlier than we were a year ago, but we wanted to at least start having the discussion relative to that, whether or not we are moving in the right direction, whether or not there needs to be any discussion looking at the proposed millage rate. And if you recall, last year, we put together 3 different forecasts because we were right in the middle of COVID, and we just didn't know what was going to, happen with that. But a couple items to point out if you look at the forecast. So with the property values, we were very fortunate to not have the negative impact that the county had projected a year ago. They had projected a 4% decrease in property taxes, and now they've kind of come around and they're projecting a 1% increase. We've factored that in accordingly as well. And then going forward, the other assumptions would include for fiscal year 23, a 2.9% increase followed by 3.8 and 4.1. And we are following the county's discussions as well. And we've sat in on the budget presentation they've done. I have read through their scenarios and looking at the impact of COVID. As the auditor mentioned earlier today, we're an unusual government because 99% of our revenues come from ad valorem taxes. And as a result, we're not impacted by some of these other areas, which would be tourism tax, sales tax, and some other items. So we're strictly reliant on property taxes. As far as the collection goes, if you recall, a year ago, we factored in a collection rate of 95%. this year, and then we had continued to go back to 97%. We still don't know the full impact of that for the current year, only because if there are taxpayers that are having trouble paying their taxes, we don't see that yet, since the tax bills are not fully due. But based on the collections that we've made to date, it appears as if that we're in line with what we had budgeted. So going forward in the projections, in the forecast, we're back at the 97% collection. So if you look in the bottom half of the chart, you'll see the different assumptions that I was referring to. So these assumptions, like I said earlier, factored in the increases in property taxes. We have not made any change to the millage rate at this particular time. In looking at the program expenses, you're very much aware that we're trying to get the strategic plan up and running. We're starting to have some pretty, I'm not going to say intense discussions, but we're having a lot of discussions on how we're implementing that, how that's going to affect us, whether or not we need to consider additional staffing needs for that, if we're going to add new programs. Do we need more staff to work in the procurement area? Do we need more staff to do the monitoring? Do we need more staff? So those things all come into play relative to looking at our future programming. We have put a placeholder in the forecast right now at $1.5 million for each of those years going out. But we hope to have more information put together as we get to the future months to be able to be a little more specific on how we intend on spending that money, because certainly we see that our unassigned fund balance is continuing to grow, and that's a concern. It's nice to have that reserve and have that extra cushion, if you would, and COVID certainly provided us with an opportunity to see that, reap the benefit, if you would, and we did use some of those funds for unexpected needs that we found in the community, but our focus is going forward is to really continue to take a look at the strategic plan, and we decided, or we've put in for the capital RFA. Last year we came back to you and asked for an increase to be able to fund all of those grant applications that had received a score of 65. We still feel like there's a need for the agencies to maybe continue to get those funds for technology, computers, other types of things to help them through this pandemic. So we've got a placeholder in there as well to keep that a dollar amount at 1.5, but we certainly can reduce that based on your pleasure or what your desire is in that regard. As far as projected lapse, right now we're looking at a projected lapse at 15%. Reminding you that last year we ended up well over what we had anticipated, and the average lapse for the previous years have been around 7 million. So right now we're at 13 million, but that's premature because we're only 4 months into the year, so we really don't have all that information. We have too many unknowns right now, but I think that the thought process was, let's have the discussion, let's hear from you, what your thoughts are, what your discussion is, and ultimately when we look at our unassigned fund balances, we move forward. If you look at the chart in the far right column under projected fiscal 25, you see that green little box where it says if we move in the direction where we're only spending $1.5 million, we'll be at 54% of the unassigned fund balance, which is extremely high, and obviously that's something we want to target and take a look at. So I'll ask for any questions or comments from you. I'll turn it back to you. Oh, Beth, Beth wanted to.
I can comment some here or some in my CEO report, but I think since you've just heard it, it makes some sense to talk at this point. As Laura pointed out, there is a significant difference in projected property values and therefore ad valorem taxes in the previous projections that we looked at last summer, upon which we based this budget, than there is today. And I think that not only do we know that from the county projections, but I think a lot of us know it anecdotally, and that is that we have this sort of barbell economy where those at the bottom end are not doing well, but property values by and large are staying high. Certainly, I think residential are staying high. Commercial, it depends on the slice and dice of, which kind of commercial you're talking about. But all of that gives us confidence in what the county's projecting, that yes, in fact, we're going to continue to see increases. So we entered this year being really conservative because we didn't know what the economy was going to do. We entered the year with a really high lapse from last year. And we have this kind of funny situation, I think, where on the one hand, a lot of our agencies aren't able to spend the money in the ways that they are budgeted, while simultaneously, not only they as agencies, but more importantly, the community has very significant needs. And it's not that easy for us to shift gears because we need to go through very specific procurement processes. So where we can, I would tell you that within agencies that we already support and within budgets that you have already approved, we may be making budget amendments between where they can't spend money and or the need isn't there, and other areas where the need is there and they can spend the money. I'll give you sort of one example of something I probably want to bring back to you, and that is we all know that mental health needs are exploding. And yet some of our mental health organizations are lapsing funds because they can't necessarily, there are certain kind of people that aren't, just because you have the money, it doesn't mean you can find them. Psychiatrists would be a good example. Master's level therapists are an example. But bachelor's level case managers who are exceedingly helpful to them are probably hireable. In other words, there are more people in that category. So there may be ways in which we want to actually add money to their budgets to make a bigger impact on mental health for children. But we have to do it practically. You can't just add money to categories where they're not going to be able to spend it. That doesn't do them any good, and it doesn't do the community and the kids any good. So it's sort of a multi-tiered process. The other part is we can do budget amendments within those organizations that we already fund and within the budget you've already approved. If we go out and want to do something new, or as we implement the strategic plan and new programs within that strategic plan, that requires the full procurement process, which, I don't know, Diana, would you say is 9 months, give or take?
6 months from the time we get a scope of work, but yeah, adding in time to develop a
So
scope of work.
to
probably 9.
develop a scope of work and then go through that, and that's just what we have to do because of the kind of organization that we are. And so so it's not as easy to spend money on things that you've theoretically agreed on, but we have to go through an appropriate and fair and compliant process in which to do it. So one thing I would say is that procurement is a bottleneck for us. Part of it's just the nature of the beast, and part of it is as you've heard, we've procured, besides everything else, we've procured 3 information systems across this last year. And that was necessary, but it sucks up time from the organization in doing that. So, children and families do have significant needs, and we have responded to a few of those this fall and last month by using lapsed funds from prior years. In essence, that unallocated fund balance. We put money into eviction prevention, and right now we are in a pause relative to that. because the county is freed up their lapsed money to agencies that were doing that work. And so right now, county money is being, from the original CARES funds, is being spent. And then when that is spent, then the JWB funds will come back in for families and children. And then, of course, none of us quite know, well, Karen may know better, but we know that there are new funds that have come to the county, and those are pretty prescribed as to how they are used. And I think the proposals were due a few days ago. I want to say 2/19. So, you know, that will take a pass. And as always, we will not supplant federal funds, which ultimately those are, that relate to eviction and prevention. But in the meantime, we were able to fill this gap where at least, I think, close to 90 families were in fact kept in their homes and were not evicted because you all approved to give us that flexibility. But that was about $3 million, and we spent, less than $300,000. And at the time, we had no idea what the federal government was going to do going forward. So, so that money will likely not be spent, or most of the rest of that will likely not be spent. We know about, two other issues we haven't really, well, we made a significant commitment to food at our last board meeting of $1,470,000. And that will, the contract's been signed, and that'll actually begin March 1st. The COVID, we know about the COVID slide. If Dr. Grego were here, he would be jumping up and down. Well, no, he never jumps up and down, but he would say with great seriousness how concerned he is about the status of learning for our children. And at the next board meeting, you'll see some presentations on our literacy programs that we started you actually saw or were funded about 1.5 years ago, but got going, between 3 and 6 months after that. And some of them are very, very successful, and there may be places that we want to add. The other area that I think we're going to want to look at spending some of this unassigned balance in will be mental health. And as I said, if we do a new thing, it's 9 months to do that new thing. And it doesn't mean we won't look at some things like that, but we also have existing programs that are very successful with very successful and strong and stable agencies. And there may be ways, with your approval, to add to those, to add funding to those without a full procurement, because they are programs that are already in existence. So that's a lot to add on to this, but I say that in the context of a very significant projected unallocated balance that we were not looking at last summer. Just to give you a sense of the numbers, the worst case we were looking at last summer was, and I'm looking out at the 5-year number, was about 21 million. The best case was 52 million, and the most likely, if you will, was 34 or 35 million. And today, and all of this will change as the year goes by, but today we're looking at something closer to 67 million. So we do know a lot more about what has happened with ad valorem taxes since last summer, when it was much harder to know. So I'll leave it at that, and then in CEO report, if you want to ask me other questions, you're welcome to do that. Or now.
I just, first, thank you guys for your great work. Laura and I talked, obviously, in preparation for the meeting. So, pre-COVID, I had looked at that unassigned funds and said, this is a lot, and we need to think about the millage rate, and we need to think about spending it. But I think that during COVID and in our new reality, you all have a really great game plan to fund the strategic plan. put those funds to use. But the one big thing, and Laura mentioned it, that I'm concerned about is the minimum wage on our out-of-school time. Our club, the Ys, I know for a fact the Ys are really struggling because a lot of their employees are part-time and a lot of them are teenagers, for their summer programs or things like that. So I would, and you may already be doing this, but I would say that one of the areas to look at, good. Yeah, good. So one of the areas to look at obviously is how can we potentially figure out if we're going to assist them with maybe not cutting every program that requires, part-time or younger employees. And again, I think it's really going to impact the out-of-school time, which I'm concerned about, particularly in the summer. So that would be another real good area to start thinking about what can we do creatively to maybe help fund those.
Yeah, there's no doubt that that's really significant, and we're, as I said, we're in the process of trying to model what that's going to look like, which is quite an undertaking. But we know it's going to hit us, and it's not as subtle as, as just saying everybody who's here is going to move up to here, and then the next year they move up to here. It's the compression that means other people are likely to also move up, and that's a lot more art than science of knowing what that will be, but we've got to take that into account. I know Diana's not doing the work, Lori Lewis is, but did you want to say anything else about that? Okay.
No, but I would just want to say thank you for reminding me that was pointed out here in the forecast, but we just don't have all that information. We have reached out to the agencies to see what they've done to take a look at this. This will probably affect the agencies that are hiring or employ part-time employees, because a lot of them probably are not at the minimum wage. But as Beth indicated, sometimes when you bring in someone at a higher wage and somebody's already in at that wage, that impacts them, because now they're looking at this person and I should be here. So there is an impact, as well as the larger agencies that maybe if they were to increase the wages for a particular program that we fund, well, now what are they going to do for other programs that we aren't funding? So there are a lot of elements that we'll be addressing, but we certainly are taking a look at that. But thank you for bringing that up.
I understand the issues around the minimum wage, and the part of the major issue with that is timing. We don't know when this is being adjusted, and then what maximum impact those adjustments may have. So although I'm extremely happy that you're doing these models, understanding that they're going to change dramatically dependent on what's happening, while we're doing that, we do have substantial funds available, and I would recommend that we start to really take a look at some of these programs. Our club would be a great example for any kind of learning forward. Food, I don't know that you could put enough money towards food if you could get it all. But that's something I think we should continue to investigate where there might be gaps. And since in our new strategic plan, we're talking about early child development, we took a good stab at it and getting it started. Is that the right amount of funds for it? I have no clue, but based on, again, what we heard in the discussion just about reading and other things with the young children, I would ask the staff to really take a good hard look at that budget and really estimate or try to see if there's room for improvement and expansion on it, so that we might hit the road, as we're doing this, hit the road even harder, and hopefully that'll impact, down the road. So those are kind of my key areas. I think that we need to address. Eventually, we will be in the, we will have to address the impact of minimum wages, but we just don't know the real timing of that. So we can't kind of sit back and wait for it. We've got to continue to work on. I'd like to see in the food areas is another one, is maybe an expansion of those other organizations that are out there that are attempting to help and expand that network. And so we build a supply chain across the county that is ready and willing to reach to places that we probably haven't in the past or couldn't in the past. So that would be a recommendation I would have.
So I'm certainly want to agree with all the comments that have been made. I also had a conversation with Laura at the pre-conversation before the Finance Committee meeting. A couple of things. I don't want us to forget the dire situation with early learning and what's coming with that. I know we'll wait and see about the cost per hour, the price per hour for employees, but they're having a real workforce crisis. And if we tie in learning loss because of COVID and we bring back in the tenets of our strategic plan, there's lots of opportunity for us to apply some additional dollars to highly successful programs lined up with this strategic plan. The only other thing I want to remind staff and board is that we have been nimble in adjusting our budget as needed for high crisis needs in this community. And so I would like to encourage the contract managers for our funded agencies. If we see through the budgeting and the finance department a trend towards more projected lapse dollars, we need to get to those funded agencies earlier, not later, to see if they have discussed with their board what are their crisis needs, what are they seeing with some additional dollars. I appreciated Beth's comment about working with those agencies, but I'm always of the mindset we need to be ahead of the curve and not behind it, and begin now with the contract managers working with those larger funded agencies that have lapsed so many dollars, that what can we do to help them, particularly in the areas of mental health, particularly in the areas of childcare, summer loss, as Mr. Ongst, out of school time. But again, just be on it now so we can ward off more lapse dollars and have this grow even more. Thanks.
Any other comments? Can we move down to discussion item C, which is the Government Finance Officers Association?
Yes, so on a happy note, and the auditor kind of mentioned that because the certificate that we did receive is included in the audited statements for fiscal 20. But just to remind you that and I don't want to beat a dead horse, but we did receive the award for Certificate of Achievement for Excellence in Financial Reporting. And I just wanted to remind you, and the memo speaks to this, is the award doesn't necessarily speak to our financial strength and so forth. That's not the purpose of the award. The award is to really look to see, are we putting enough information through disclosures, through statisticals, that the user can read it and get enough information out of it that they need. So we were, for fiscal 19, apparently they had 3,500 organizations, entities that were, who got the award, and there were about 55 that had gotten first-time awards, and we were included in that pack. So I wanted to thank Lynn and her staff for all the effort and time that she had putting this in together, and I've asked Brian to say a few words.
Thank you, Laura, and I asked the staff for a press release. I didn't realize they were giving me a press conference, so apologize for apologize for taking up your all's time with this. But this is important, and this is a recognition of the staff. What I'm about to read here. For 75 years, Pinellas County taxpayers have been entrusting the Juvenile Welfare Board to invest wisely in the future of our children. As our budgets have grown over the years, so have our responsibilities for being not just good but excellent stewards of citizen investments and to ensure the highest level of accountability and transparency. The FY19 Comprehensive Annual Financial Report, or CAFR, represents JWB's financial practices during the time that I had the pleasure of serving as your board chair. And the Government Finance Officers Association's Certificate of Achievement for Excellence in Financing Reporting Award, for which the FY19 CAFR was recognized, is the gold standard of awards. It demonstrates excellence in governmental accounting and financial reporting, and its attainment represents a significant accomplishment by JWB, its leadership, and its accounting team, and especially its accounting team. The accounting team, led by JWB manager Lynn Delatorre, gathered 10 years of statistical data in addition to their day-to-day job responsibilities. Plus, they received this prestigious award on their very first submittal. The numbers that Laura just read to you indicate that less than 2% of the award winners, 1.6%, were first-time submitters for this award. So that is a really excellent, outstanding achievement. It also demonstrates the quality of the work that you and your team put into this. I also want to mention and thank Dr. Biddleman and Brian J. Brian J. may be the only Brian that has a weirder last name than me. And every time over the years that someone would say Brian during one of our meetings, I would kind of jump out of my slumber and then realize they were talking to Brian J. So I think Dr. Biddleman and Brian J. also deserve some recognition for this. So at this time, it gives me great pleasure to present the actual GFOA Certificate of Achievement for Excellence in Financial Reporting to Lynn Delatorre. Thank you, Lynn. Congratulations. And as you know, Lynn has spent her entire career in governmental accounting, including 11 years with the city of St. Petersburg. And this June, Lynn will celebrate 18 years here with us with the JWB, and we're very, very thankful for your work. So thank you very much.
Thank you, Brian, for presenting that award, and once again, thank you to the team, because I know it's a team effort, and you've done an amazing job. Let's see that award again next year and the year after and ongoing. But again, we all appreciate the work that you've done and continue to do. Thank you. All right, let's move on to our Chief Executive Officer's report.
Well, I'll make this fairly brief because the most important things I wanted to say, I've already said. I would add or maybe underline the fact that as needs grow in our community and as the children and families need the services that we are in a unique position to fund, and our budget grows in the aggregate, we also have to look at our own staff. And I've now had the opportunity of a year and a half, granted most of, a year of that has been COVID. But nevertheless, we have some areas within our staff that, as I mentioned before, become real bottlenecks to us being able to do the work that we do. We have a very hardworking staff. They are very dedicated. And so it is not to say that they're not putting the work in, but it's also because we live in a highly compliance kind of ridden environment that everything we do has to be done in a very particular way. And so some things that might sound to the rest of us like a simple thing to get done take 3 more pieces of paperwork than it might otherwise. One of those is procurement, but that's not the only one. It goes across the entire agency. So I think you are likely to hear from me, come back to you in one of the next board meetings, both some projections for expansions to contracts with providers that we already have in place, because that is a way we can get money into the community more quickly in areas that we already know that they're of need. Mental health would be a significant one of those. The other thing that is easier said than done, once you have money, that's fine, but you still need to hire the right people. You're going to hear me talk about some positions that we need to add. And as we look at the percentage of our administrative cost as a percentage of our budget, and it is because our budget is growing and the number of people have been relatively flat, we are still well within the kinds of numbers we've lived with. So I take that very seriously. Those are taxpayer dollars that are important and are critical, but don't get out into the community. And so we always want to keep a good handle on that. So those are sort of previews of what I think you're gonna see in at one of the next board meetings.
That's all I have.
Great, keep it coming. The more we can do and the better we can become, the more value we add to our community, and that's extremely important. Do we have any comments or anything else on an open agenda? Yes, Commissioner?
I just wanted to check on the dates that are put on the agenda for the audit.
For the
I
audit
lost
committee?
my-
It's on the back of the,
Are those all accurate times? Because I was sent an invitation for June 21st, and then I was sent another invitation canceling it. So I just want to make sure that the dates are
yeah,
accurate. so
actually, I'll
can go
check what I
ahead
have on my
and put them on
calendar
my
as well,
calendar.
just to make sure.
Well, I think part of it was because there's two meetings
Yeah.
on the 21st, and we had to create them as separate meetings, because one of them's open to the public and one of them isn't. So I think there was some confusion on the invite, but you should have those. But
Okay,
we-
so
we'll s-
the message on the first two, on the back of this says, Monday, May 17th at 2021 at 9 a.m. is correct. Monday, June 21st, 2021 at 10:40. But there was also, which was also confusing me, so I'm glad you brought it up. I had a 9 o'clock as well.
Yeah, if you look further down, the next section, there's
Okay.
the 9
Oh,
o'clock.
9 o'clock, same date, yes. So it starts at 9, goes through roughly 1 p.m. on that day.
Right, but it's two
But it's
two
two
meetings,
meetings.
correct. That's why the first meeting starts at 9, and then that's not open to the public, and then the second meeting starts at 10:40.
Right, okay.
Laura, the meeting at 10:40 though, it's listed on here as a JWB board meeting, but shouldn't that be an auditor selection committee, not a board meeting?
Well, it just says future meetings above, but below it, it says JWB
Oh.
Finance and Audit Selection Committee meetings.
Right.
Is that what you were
Oh,
saying?
I see what you're saying. Yeah,
Okay.
it is a little.
Yeah, I agree.
And I did also get the cancellation invite, and I think it's because we had gotten extras.
Right,
So
but
that somebody was trying to delete one of them.
yeah.
It is a little confusing.
Okay,
Well,
but we
the
have
9
them, we have the correct dates now.
Okay, so the 10:40 is open to the public, the 9 a.m. portion is not.
Yes.
Okay.
All right, and then we have the upcoming JW Finance meeting on August the 26th, and then the JWB meetings on March 11th, April 8th, May 13th, and June 17th. Are there any other questions or comments? If none, having none, let's, the board meeting is concluded. Thank you.
So, listen, here's what happened.